Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting a quite important historical structure level for this market. In fact, what we know is that this zone was already acting as resistance here, preceding all this move to the downside. Again, here the market tested its zone and rejected it to the downside. And again, here we can see how the market is currently testing the area and rejecting it to the downside. However, while we are rejecting this zone, we must also keep in mind that there is some minor resistance that is now turned support at this zone. In fact, if we look closely at the most recent price action, what we can see is that exactly from this level, the market had started all this rejection to the downside with the creation of this massive red candle. And all this previous resistance, now that the market has broken it to the upside and is currently retesting it, is currently acting as support. So what we could expect is a potential short-term rejection to the upside away from this area, which is previous monthly resistance turned support. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, if we follow the large pattern that the market has created here, we can see that from this low to this high, we can consider this a bullish move in the market. Now, if we have a move like this, which could be considered like a full impulse, and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that we have a market which at the moment has the 50% and 0.618 Fibonacci retracements currently lining up exactly at this previous resistance turn support level, which create confluence of support at this zone, which we could expect this market to potentially reject to the upside. Dropping down on the daily time frame, what do we have? Now here on the daily, this is where things get quite interesting. In fact, we can see that while the market is creating this move to the downside, it is also printing this M pattern. And in general, after the creation of an M pattern, what you could expect is a potential reversal higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, before we continue here with our analysis, it's important to keep in mind that we have to check also what is going on when it comes to the commitment of traders. And by the way, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, from here, I explained why we could expect the creation of this move to the upside, correction and higher high. I also spoke about gold after the creation of this M pattern, explaining all the reasons for which we could expect a move higher. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, before we continue with our analysis from a technical perspective here in the daily time frame, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. Now, if we start here by looking at the net positions, what we can see is that first net positions started decreasing, going from 195k all the way down to 169k. This shows how institutions were essentially adding shorts to gold and closing their longs. In fact, we went from 266k longs down to 237k longs. And in a situation like this, you can expect gold to get weaker. And in fact, that is exactly what we see. we can see how gold was getting weaker. However, now that we are approaching that minor support that we have identified by looking at the monthly time frame at the beginning of the video, we can see how once again institutions have been adding longs, with 161 longs added with the last report, and closing shorts with 6.1k shorts closed with the last report. So once again, now net positions are starting to get increased, going from 169k to 175k net positions. This shows how institutions are once again starting to slowly shift to the bullish side of gold, which means that since here on the daily time frame the market is creating this M pattern, there is the possibility for a potential completion of this M pattern before then potentially getting more bearish continuation. But first, we would like to see a potential completion of that M pattern at the neckline with the creation of some short-term bullish price action for a move back up at the neckline, completing this pattern. And since institutions are in fact adding longs and closing shorts, there is the possibility for this potential move to the upside. So how we could be approaching this potential move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you joined the mentorship program directly from your student dashboard, you open a trading account with them and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.